Hello, today is January 20th, 2018. My last call said that Thursday's pattern was negative and should lead to lower prices. I also said that if we gapped up, all bets were off. What you have to do to invalidate this pattern is to gap up sharply and promptly overtake the day's high, which is what we did. So the call was killed before the open. Even if I don't say it, I have a standard rule that gapping sharply in the undesired direction kills the call before the open. Monday's open should be interesting because the standard technical analysis that I know and my own personal indicators are saying quite the opposite. Let's go over what the positive aspects of this rally are. First of all, if you rally all day long on a Friday, it's a very positive sign. Almost always it carries over into Monday. If you gap down sharply Monday instead, it shows something else is going on and is a sign of weakness. But the usual continuation is to keep rallying and to go higher. In addition, Monday's pattern should be the one with an early high. It tends to lead to an all-day rally, closes near the high the vast majority of the time. We're also in one of the strongest bull markets on record, so all those things are pointing to higher prices. The one thing that would kill it would be gapping down sharply at the open, particularly if we gap down sharply at the open and undercut this low. I'm not predicting that that'll happen, but there are some things making it plausible. We'll know by the open. What makes it plausible? First of all, we have a Hobson close coming in with, if we rally to a new high and close right at the high, usually it's a sign of amateurs going long right at the end. Coming within 3 cents is close enough for me, but when it's an all-time high, or at least a high of the leg, the chance that works is only 50-50. 50-50 isn't 100%, or it isn't zero either, but if it happens, it at least makes it plausible. Here are the MEJT signals. Early on, we got an ultimate sell. We've hit the minimum. Usually, we get more than we got, which means usually we'd undercut 2801.12 at some point. The system says that this drop was false and prices should retrace. It also says the rally is false, gives us a target of hitting 2802.98, most likely by Monday's close. Just to review how these MEJT signals work, with other systems, when you get a sell signal, you act. That's not how MEJT works. When you get a sell signal, it means there's a target at a lower price and support at that price. Doesn't mean support has to hold. It doesn't mean you have to hit the target immediately. It's a target. It's not an entry. Now, if you're negative for other reasons and you go short and you get a signal like this, that's fine. But MEJT said any drop in this time frame wasn't going to stick anyway. All it says is you have a lower target and support there. So to go short here without something else to support it is not what the system calls for. Now at this point, you have a lower target and an optional target even lower than that are pretty far away. It's when the targets are far away that the risk-reward ratio shifts into your favor if you want to act on the signal. This isn't an entry here. The signal doesn't really give entries per se. It gives targets. But at least at this point, you have a more favorable risk-to-reward ratio than you had when the signal was given. It's a concept that can be hard to get used to because when you get a signal, you have to act on it. But as it says in the book, it gives a target, and the target can be immediate or delayed, and I don't know how to tell which it is. You just have to use other things to see if the risk-reward is worth taking. So that's calling for lower prices. Well, it says in Animal Farm all animals are equal, but some animals are more equal than others, and that's true of prices. Let's go back to the beginnings of this leg up back in February of 2016. The first leg was plus 136.60. Let's call it 137 points. If you go out 137 calendar days, you can get a nice low. That's what that's a linkage of time and price. If you go out every 137 days, you're going to get some complete misses, but you're going to get some pretty nice hits. And the market likes to use this 137 as a measuring stick for how high rallies can go. There are a number of times, let's try that again. If it'll let me. There are a number of times you can take 137 points and see how far the rally's going to go. It's not too bad. So what makes life interesting is this last move up was 137 points. There are some other measuring sticks that come up with this price, and there are some other measuring sticks that come up with a January 19th date. Now, I don't know if it's going to work or not. This is pretty strong action to me. All my standard analysis says this is a bull market and we're going higher. But if we gap down sharply, it's a plausible place for it to end based on time and price, and here's the target. I think we'll know before the open whether or not that happens, and once we know that, we can plan our next trades accordingly, and that's today's call.